Let me ask you something. If home prices were really going to come down, wouldn't we be seeing it clearly by now? We've had higher mortgage rates for quite a while. Inventory has improved in certain parts of the country, and buyers aren't bidding aggressively the way they were 2 or 3 years ago. So it makes sense that a lot of people are thinking, okay, this has to be the year that prices finally fall. But once you step back from the noise and focus on the numbers, the situation isn't as simple as it feels. Yes, the market has shifted. Yes, things have cooled from the frenzy we experienced a few years ago, but cooling off and coming down are two very different things. So today, let's look at what the numbers are actually saying and what that means for you if you're buying or selling in 2026. No drama, no fear-based predictions, just data and perspective. Let's start with the national data is actually telling us. The Federal Housing Finance Agency, or FHFA, releases a quarterly house price index that tracks home values across the country. In its most recent report for the first quarter of 2026, prices are still up compared to the same time last year. The growth rate is much slower than what we saw during the pandemic surge, but it is still positive. That matters because when people talk about a housing correction or crash, what they are usually imagining is a broad national price decline across the board. That is simply not what the data is showing. Now let's look at Zillow. Zillow's home value index also shows that U.S. home values are slightly higher than they were a year ago. Again, we are talking about modest growth, not dramatic or overheated, but not negative territory either. Then we have Redfin's 2026 housing forecast. Redfin is projecting roughly 1% price growth nationally this year. It is steady and measured, and it lines up with what we are seeing in other reports. That is a very different environment from 2021, and it is also very different from the collapse we saw in 2008. When you step back and look at the broader picture, the pattern is consistent. Growth is cooled, things are more balanced, but prices are not falling nationally. So why does it feel like home prices should be falling? Homes are still expensive. Monthly payments are high because of mortgage rates. First-time buyers are stretched. So emotionally, it feels like prices should be correcting. But here's what is happening instead. Higher mortgage rates cooled demand, yes, but they also locked many homeowners into very low mortgage rates from a few years ago. That limited the number of people willing to sell because giving up a 3% rate or a 6 or 7% rate is just a big jump. So supply never surged the way some people expected. In many markets, we are still dealing with relatively tight inventory. Not extreme shortages like before, but not oversupply either. And when supply stays tight, even softer demand is not always enough to push prices down significantly. That balance is what's holding prices steady. Buyers are more cautious, sellers are more realistic, but neither side is desperate. And markets do not crash when both sides are relatively stable. Looking ahead, most forecasts remain conservative but steady. Redfin expects about a 1% growth nationally this year. Zillow anticipates modest appreciation as well. And FHFA's data continues to show year-over-year gains. When several independent reports show the same trend, that adds credibility. But it does not mean every city is experiencing the exact same conditions. There are pockets, especially in some oversupplied metro areas, where prices have softened, and we may see a little more of that in certain markets. There is less bidding competition. There are more inventory choices, and there is often more flexibility to negotiate. Those factors can sometimes create more opportunity than a small price decline would. In other words, you may not see lower prices, but you may see better terms. And in many cases, that can have just as much impact on your overall investment. Now, what does this mean for sellers? There is no longer a name your price market. Pricing strategy, presentation, and preparation matter more now. Buyers are comparing homes more carefully as they have options. That means positioning is everything. But values are not collapsing. In most markets, well-positioned homes are still selling at stable levels. The sellers who win in this market are the ones who price realistically from the start and present their home in a way that stands out. So are home prices finally coming down in 2026? Nationally, the data says no. What we are seeing instead is stabilization. The rapid run-up we experienced a few years ago has leveled off, but broad price declines simply are not showing up in the national numbers. Now, what is happening across the country and what is happening in your neighborhood can be two very different things. Real estate is local. That is where the real story is. If you are wondering what this means for your home's value or your buying power, let's take a closer look at your specific market. You can reach out to schedule a one-on-one strategy call, and we will build a custom plan that makes sense for you this year. And if you found this breakdown helpful, make sure to like and subscribe so you don't miss any future updates and practical real estate insight.